Hi, welcome back. Investing family. We are going to talk about ARV. I'm working with a group of investors, and we are called Lone Star Property Investments Group. And let's get to it. So, ARV, or after repair value, is a real estate investing term used to describe estimate of a property when what would it be worth after needed for repairs, upgrades, and renovations are done. So in ARV, let's say we have a property and I'll go to our webpage and I'll just find a property here. So I just found a property in Zillow. The property value is their asking price is this is what the seller wants, $156,250. It's 3 beds, 3 baths, and square footage is 2,164 square foot. They just recently cut it 3K off of it. And the Z estimate is $210,806. So let's look at look at homes nearby. So right here it shows you homes nearby, and you can see the different homes selling for upwards to 200,000, and upwards like that. But we have to look at homes that are repaired. So this home looks newer. So when looking at homes in similar value, just look how much you can get if you can repair full restoration, and just kind of look at which homes closest to value, and which homes are repaired. So this looks remodeled. So I would say you could get about 210,000 if remodeled, and maybe about around 180 to 210,000 if remodeled. So this home looks remodeled. You can see how the pictures, how it's the bathroom is remodeled, and this is an older home. This is a home from the, let's see, you can see on here 1952. So this is a remodel home, and inside flooring, tiles remodeled, cabinets, and door maybe screen fixtures. So we know that if we put a good amount of money, maybe 20-30,000, we can get about 210,000 or 20,000 after repair value. So you can read the description. Hooray, hooray. Investor special. Cash only brings your best offer will accept the best offer. This is a great location close to all major freeways. A medical center downtown, stadium needed some TLC, which is tender loving care. Seller would not make any repairs, so as this. So this is a property that people will sell quickly, and they want to get rid of it, and they want the $156,000 in cash. So refinancing is no option. Maybe do which is called a loan, and hard money lenders. You can ask them for that amount, but what the deal with hard money lenders is that you have to pay them back the hard money with interest, with higher interest. So it could be a gamble if you're doing hard money lending. But let's talk about ARV, the after repair value. So let's calculate this. and we're using what's called out. Let me look it up for you. 70% 70% rule in ARV. So I should just show you what is the 70% rule when flipping houses. The 70% rule states a house flipper should pay 70% of the ARV after repair value, minus any repairs when buying a house to flip. The ARV is $150,000, and house needs this sample $20K in it. Repairs, then buy price is $85K. So $150,000 is the ARV, and $20,000 to repair it, and times 70% minus any repairs, then the buy price should be $85K. When I'm buying as an investor, this is the amount that I feel comfortable when buying it. So that's the 70% rule. So let's look at if this is a good buy. So using a calculator, which I'll provide this calculator for you. It does all the calculations for you. So the market value currently, let's see, is $156,250. 70% at the fair value, we just leave it at the same. And if you want to do a little breakdown of the ARV, we can be looking into it. So the ARV is the breakdown. Let's see, 9% closing costs, carrying costs. So this is the offer formula, the 70% rule. So this is 30% goes to total buyer potential gain, and this is a little breakdown. 9% goes to closing costs, 6% carrying costs, like anything with fees and stuff like that, and 50% is a profit you want to make. So that goes to 30%, and 70% will be, the repair minus all the repairs and stuff like that. So let's look at this formula. So I put this as designated as 70%. So repair costs, I would say about, after full repair, let's do 210, because the other house was 210, 156 minus 250. Let's say let's put in that much for repairs. And as an investor, this is the finder's fee. Let's say if you're working with an investment group like us, Lone Star Property Investments, we will have a fee charged, preferably about 1 to 2% of the final sell. So let's say 1% of $156,250 times, let's say 2%, is equal. So I would say $3,125. Could we get less Then the realtors charge 6%, maybe even 6%. We'll charge maybe 1 to 2%. So we'll get 3,000 from the sale. So the maximum allowed offer that we feel comfortable as an investment group will be 52,000 if we pay cash as an investment group. So we will offer $52,000, $500 for cash. But let's say we reduce the repair cost. Say it's we only need $30,000 repair, maybe something simple, and it will increase the maximum allowable offer. And there goes in with the housing inspectors. You gotta make sure look thoroughly on the home. Make sure that what we need to fix we can fix, but some things that you just need to do minor repairs. You don't need to fix too much. So you can see the sidings, the wood stripping. See any. This is mostly cosmetic things. These cabinets you can keep. You see an old appliance, maybe replace that appliance. This is just the visual from the picture. And most of the time you have to actually go to the physical location because pictures don't show the actual don't show what's need to be repaired. So maybe paint, a couple $100. You'll notice fireplace need to be cleaned out. It's a couple $100 right there. I'm not sure the fan, electrical working. We're not sure about that, so you only see what the pictures. Roof looks somewhat new. We don't know the age of the roof. We can't really tell the age of the roof, but from here we can see the fencing. So that's a couple $100. So I would say about a couple hundred in repairs. From looking at this picture, I would say about visual inspection. I would say about $10,000. So so what we will offer if this is all correct, we will offer $96,250, and this is the offer that all cash for seller. Well, let's say if we're dealing with a realtor, how much would realtors charge? They was charged about like $156,200. Okay, times 0.06. So they would charge a lot more on the fees, and it's usually about 60% or to 4%. Let's go to the low end, 4%. So they give about $6,000. Plus you have title fees and stuff like that, and all these things they eventually add up. So that's why people when they're investing in homes that need fixing up, they offer them cash like this. We will offer them $96,250 in cash, so that we purchase the home and we remodel it so it's more professional and modern style. So and we put it out on the markets, so we have we can sell it to somebody for a higher value. So that is ARV in a crunch. And if you have any questions, our information is down below, and our Facebook is down below. Thank you. Goodbye.